even when they lose, they win. I mean, ultimately, like how do they compete with MicroStrategy?
Where do we draw the line with regards to institutions of ownership of these networks?
Was FTX crypto's Chernobyl moment, which is to say, like, yes, blockchains are amazingly innovative technology, and crypto assets are these sort of tools we can use to reprogram the financial industry and so much more. But if you have a big disaster and it changes people's perception of the technology.
Welcome back to The Roll Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners. The intersection of AI and crypto is moving fast, and soon an agent will be managing your on-chain transactions for you. But without guardrails, it's a disaster waiting to happen. Newton locks agents to your intent with cryptographic proofs and real penalties if they slip. Learn more at Magic Newton on X. What's going on, guys? Welcome back to The Roll-Up. Today we have Alex Tapscott, the man whose father and himself wrote the book that got me into crypto. Going full circle here, 2017. I was longing Litecoin on Kraken and trading Dragon Chain on the announcement of a Walt Disney Corporation partnership on Bittrex. How the times turn. Alex, good to have you on, man.
Yeah, thanks for having me.
Yeah, man, you've got quite the tenure in crypto, publications, board of directory of different boards in Canada, and really just been a pioneer. So it would be remiss to ask, it would be remiss to not ask, how did you find this weird esoteric niche world that we call crypto?
Yeah, my tenure, it's actually a 10-year tenure, I think. I think I'm in my 11th year of being in this space. I came at crypto in 2013. And I say crypto, but really I should say Bitcoin, because this is actually before the word crypto really entered the vernacular. And certainly it was before Ethereum or smart contracts, DeFi, or any of these other topics. And I think, like a lot of people, I was interested in it. At the time, I was working in investment banking in a capital markets role. So I was on a trading desk, and, we were trading mostly cash equities, but, often someone would come with a novel idea. And I think it was one of our young clients who said, have you heard of this thing called Bitcoin? I remember my head trader turned to me and he said, Bitcoin, have you heard about Bitcoin? Because at the time I was like one of the youngest guys on the desk. And I said, no, I haven't heard of Bitcoin. He says, should we buy it? I was like, well, do you know anything about it? He's like, no, but it just keeps going up. So I think that's like a lot of people kind of how I first learned about it.
What was the price back then?
Like
was it
$300 or $400, I think.
Yeah, nice.
Hard to say. It may have been because, at the time it was so volatile. It's funny because people think it's volatile now, but it used to be really volatile, right? Like, I think I remember when it retraced from like, $1,400 down to like $250 or something. But anyway, so it was sometime in and around that period. And, I think like a lot of people, I got kind of curious about it. But the more that I looked into Bitcoin, the more convinced I became that while Bitcoin as an asset class, as an asset was really interesting, the underlying technology of the blockchain could be even more interesting. And so that was sort of my thinking early on. I wouldn't say it went really far beyond that, but I was on a ski trip with my dad, who you mentioned at the outset, in Mont Tremblant, which is in Quebec here in Canada where I live. And he was asking me, like, hey, son, like, what are you doing these days? What are you working on? What's interesting to you, at the office? And I said, actually, I've been learning a little more about this thing called Bitcoin. And this was right around the time that some Bitcoin miners were considering tapping the traditional capital markets to raise money. And Canada is a place that's always been really open-minded to new industries. We have a public market that supports early stage ventures. And so I had actually seen a couple of companies come through our office that were looking to raise money. And so I'd become sort of like the resident expert in our firm, which is to say the only person who showed any interest at all in Bitcoin. Everyone else was like, what is this thing?
It's still like that. Like, I was just at a like pregame and a dinner with a couple of my older buddies who are in finance, and they were asking me to explain them Bitcoin. And what helps now is that gold's going up, and so people are like, they understand gold.
Yeah.
But I just want you to know that it's still like that today.
Oh yeah, and I experience this too on a daily basis. And I think that digital gold analogy is useful, when thinking about Bitcoin as an asset class. But as a technology, I think it falls short. It undersells Bitcoin's capability and its potential. And anyway, so going back to that story, so he said, that's really interesting because I'm looking at Bitcoin too. And I was like, you are? My dad's a baby boomer, but he's someone who's also a technologist. He's been investigating the impact of technology on business, on society, on government, on culture for many, many decades. And he's written several best-selling books. He wrote a book called Wikonomics, which is the first bestseller about Web 2. He wrote a book called The Digital Economy, which is the first bestseller about the web. It came out in 1994. So you can see how early it was. So in a way, it wasn't totally surprising that he was interested in like this new thing. But you got to remember at the time, like Bitcoin had a market cap of maybe $6 or $7 billion. If it was a publicly traded company, it would have barely cracked the S&P 500. It would have been considered like a small to mid cap stock. So it's not like it was on everyone's radar at the time, right? But anyway, he was looking into it, and he said, we're trying to figure out if there's something there. And we're doing this research project at the time through the University of Toronto. Would you be interested in joining and writing a research report? We don't have anybody who knows much about Bitcoin or has any capital markets or finance experience, and you have both. So why not? So I was still working my job at the time, but I had some spare time on, evenings and weekends. And I hadn't written anything longer than an email in like 8 years, but I thought, yeah, I'll give it a shot and write a research report. So that report came out in, I think it was like August of 2014. And it was called the Bitcoin Governance Network. And it was basically, how do we ensure that this technology, which is a decentralized sort of global public good, how do we turn this thing into, how do we help it reach its potential? What is needed? What kind of governance, what kind of coordination is needed? And at the time, that was actually kind of a controversial topic because Bitcoin didn't need governance, it didn't need coordination. It was supposed to be beyond that. It was decentralized. But I think what we've learned is actually a little coordination can go a long way. So that report became the basis of other work that we did together. And that eventually his publisher, or actually his literary agent, got wind of this research that he and I were doing. And he said, do you think there's a book in this topic? And so he and I got to work on a book proposal and shopped it around. And it was his publisher of his prior book, Penguin Random House, who bought the rights. They paid us a nice, healthy advance. And my dad basically came to me and said, you've got this job, you seem to enjoy it. Would you be interested in quitting and retiring, in effect, in order to write a book with me? And even though, you've never written a book. And I didn't have to think about the decision very long. They say when you're offered a seat on a rocket ship, you don't ask which seat, you just kind of hop on. So I was like, to hell with it. So I waited for my annual, my year-end bonus to clear. And then the day after it hit my bank account, I quit my job and started to write the book. And that book came out in 2016. It's called Blockchain Revolution. And, they say luck is the combination of preparation and good timing. So we've done a lot of work on this book. We interviewed all the top people that, these days are hard to get access to if you were a new author. Back then it was easy. We spoke to Jeremy Allaire and Vitalik Buterin and Joe Lubin, the founder of Consensus. We were actually in Consensus's office the day the Genesis block was mined, and Consensus, which I think closed around at a $7 billion valuation recently, their office was smaller than my home office. There were not enough room for 5 people to sit down in this office. So we really felt like we were kind of there, present at the creation, as the expression says, right? You're present at the start of something. You don't really know what it is, but you feel like it's kind of a big deal. So we did the prep, and then we got lucky with the timing. And that book ended up becoming really the book a lot of people, I think, credit with getting their start in crypto or helping to spark their interest in crypto. And that's something I continue to hear to this day. So with the launch of that book in 2016, it really sort of set me on a trajectory that I hadn't imagined before that, which is that I became completely involved 100% in crypto, in educating, consulting, and as you said, like advisory and board work, investing in this space, and writing too. Blockchain Revolution was a book I wrote with my dad, and a couple of years ago, I wrote my own book called Web3, Charting the Internet's Next Economic and Cultural Frontier, which really builds on some of those ideas from Blockchain Revolution and updates them for, the modern era.
Yeah, man. I mean, I credit that book to my deep understanding of the core ethos of the space. This is blockchain revolution that I'm speaking about, where, when I look at the space today, there is an over exaggeration of certain aspects that are the result of, the great social experiment that is permissionless finance, whether for better or for worse. But the core ideas of the permissionless networks, immutability, censorship resistance, really just this idea of like non-sovereign or non-state form of money, sovereign hard money, was particularly compelling. And this was also in my generation where, I was 17 and I just realized that you could actually start a career online. Like I remember I had this like ex-girlfriend or something, and I'd be working on this online business. It was like 2018 or so, after I got completely wiped in the 2017 bull. And we were talking, and the question was, are you just going to be working on your computer, and just doing like computer work for the rest of your life and like not going into the office? And like crypto kind of started this entire idea for me, but it was really rooted in the core ideals. And I think there's a discrepancy as you look across who and which types of people have joined in certain times. Like the people that joined in 2013, they're probably far more hardcore libertarian than I am, right? But I think the people that joined 2021, 2022, and then who have recently joined, I think they like less of the core ideals have kind of like stuck through time. And this is kind of worrying to me.
I would say that I'm probably second generation. So definitely like the first generation, the people who, because remember, this all began with Bitcoin. They had a very clear philosophical sort of motivation for getting involved with this.
100%.
And like if you think about Bitcoin and the when um, when Satoshi hashed the cover of that English newspaper, sort of saying that banks seek bailout from Chancellor of the Exchequer. It began as a political exercise as much as it began as a technology experiment, I think, right? And I think that's really amazing because a lot of innovations begin with or are motivated by some kind of new politics or sort of new way of thinking about the world, right? Like the Protestant Reformation went hand in glove with the invention of the printing press, which was able to break the church's monopoly on information. If you think about the industrial era and the corporation, that gave rise to a new kind of wealthy elite, a counter elite to the agrarian landlords of the feudal era, and led to all sorts of disruptions. But that was because of industrialization and the corporation. The internet was this democratizing force that made access to information uh, equal, at least for people who had an internet connection, which is a big caveat, but still. And that broke, the monopoly that traditional publishers have on information, and also led to disinformation and all sorts of other issues. But the point is that it created something new. And so I think about like Bitcoin is a technology fundamentally. Blockchain is a technology that makes it impossible to spend the same asset twice and creates a record of transactions that everyone can trust, which means we don't need an intermediary to coordinate and to move and store value. And that is something that is like fundamentally, a technology innovation, but it's embedded in that is an ethos that that people online can voluntarily transact and coordinate and do business without the need for middlemen. And those middlemen can include financial intermediaries, but they can also include central banks and governments that issue the currency. So to me, that was the first generation, and I was influenced by that. I thought it was really compelling, but I was also interested in what was coming next, right? So I think sort of like the Ethereum era, the idea that, okay, well, if you can use a blockchain network to secure transactions in Bitcoin, could you use it as a way to secure transactions in other assets? And could you program it to perform a lot of the business logic that goes into commerce, contracting, record keeping, and so forth. So the idea of a general purpose blockchain that enabled smart contracts and other kinds of assets to me was like really, really appealing. And that was really, like, you'll remember, Andy, from reading the first book, Blockchain Revolution. Our thesis was basically that the internet was entering a new era, that we had an internet of information, and now we had an internet of value, a way to a public open network, just like the web, but for assets instead of for information. And that was going to have an impact on every industry, and financial services being the most obvious beneficiary because it's the industry that deals in assets and is powerful and deeply entrenched, so naturally was going to be disrupted, but also all sorts of other industries too. And in that book and in the work that we've done since, we examine the impact on cultural industries, on financial services, on government, on society, and even on the corporation itself, how we organize capability in the economy. You mentioned that you're primarily online. It's interesting that the online work from home sort of digital nomad revolution coincided with the innovation, the blockchain revolution,
Yep.
but also the creation of new organizational structures like DAOs, which make it possible for you to earn money without ever needing to be employed as or contracted by a corporation. And I think that's really interesting too.
Yeah, I mean, that is the epitome of the idea that goes back to the core ethos, DAOs themselves. But then this entire concept of internet of value, what that does for people globally was also a really big peak of interest for me, where it was like, okay, we have a form of effectively capital formation, appreciation, and wealth creation that it can be accessed globally. Now, one thing that I've learned through the investing woes, upsides, downside, is that crypto is very path dependent. There are a lot of things that have happened that you couldn't have predicted, but then these little forks in the road set the stage for the future of the space. Tether is a good example where there was so much Tether FUD in the past, and had there been something that came out, right, Tether would likely look far different than it does today with regards to its status as being entrenched in every centralized exchange and effectively being the largest stablecoin in the crypto markets. Ethereum is another example, right? There was all these different Ethereum killers and different L1s and chains, and had something changed with the way that Ethereum launched, or had the DAO kind of hack not planned out or played out the way that it did, we could be in a whole different world where there's a different dominant smart contract platform, not Ethereum.
Well, I'll give you another example of that, which is, had FTX not gone under, right, or had Luna not blown up, we might be even further ahead than we are today, right? Like, both the examples you provided are ones where things went well and where, as a result, it advanced the ball forward. But there are a lot of examples where it has not. And that's something that to me is really interesting, talking about path dependency when it comes to new technology. Because, like, oftentimes technologies come along that are so disruptive and so, innovative that it's almost doesn't matter that there are setbacks and disasters along the way. You think about the invention of, like, the steam engine. Like, the steam engine was originally used to clear the air out of mines in England to keep miners working for longer. And it wasn't until decades later that it was used in railways, which is how we think about it today. And there were a lot of mine collapses, and there were a lot of rail derailments and a lot of deaths throughout this 18th and obviously the 19th century. But the railway and the steam engine were so powerful that they just sort of steamrolled everyone, for lack of a better term. But then there are other technologies that seem to have the same potential, but get derailed in some way. So to me, the best example of this was shared actually by a venture capitalist who is a very thoughtful guy. He said, look at nuclear power. So after the Second World War, when we learned to harness nuclear power for civilian use, for nuclear power generation, we had in our hands a technology that at scale could potentially allow us to wean ourselves off of fossil fuels, and in the process, address man-made climate change. But the problem was that in the 70s, we had in the US 3 Mile Island, and then in the 80s, Chernobyl, right? Um, the year I was born, there was the biggest nuclear disaster of all time. And after Chernobyl, people stopped building nuclear power plants. And the percentage of the electricity generation that comes from nuclear flatlined and then started to decline. Where Germany has been decommissioning nuclear power plants rather than upgrading them. And now, with Russia in a war with Ukraine, has no source of energy other than to pay through the teeth for Russian oil. So, nuclear power was something that had huge potential, but had a Chernobyl moment where the path was like this, right? But then at some point it tilted and started to go in another direction. So I think about crypto a lot in that context. Like I actually wrote an op-ed for CoinDesk 2 years ago called "Was FTX Crypto's Chernobyl Moment?" Which is to say, like, yes, blockchains are amazingly innovative technology, and crypto assets are these sort of tools we can use to reprogram the financial industry and so much more. But if you have a big disaster and it changes people's perception of the technology, that can actually change the trajectory of the technology, which is really what happened with Chernobyl. Chernobyl didn't prove that nuclear power doesn't work. What it did was it said everyone said not in my backyard, and we just stopped building after that. So I think like there was a moment where crypto appeared destined in a way to the back burner of sort of history, like as one of those innovations that was really neat and had its moment but never reached its potential. But I think we've gotten over that, and I think that we're in this moment right now where we have another kick at the can to fulfill some of that promise, but it could go wrong again, and I think that that's something that we should all keep in mind.
Well, as much as you Canadians despise Trump currently, I know because my family's Canadian, and I just had my cousins down. I was visiting them in Florida, and they were telling me about the Canada flags everywhere, stickers on everything made in Canada. People are being advised to not come to the States. In fact, my cousin was getting semi harassed by her friends for coming to the States, but family was a good enough excuse. That being said, Trump's election has also just gave another fork in the road where had the Democrats won, I believe, in the States, had Gary Gensler remained in the SEC power, this would have been another somewhat of a perceived, at least, Chernobyl moment for the space, where now it's actually turned out to be quite the opposite for several reasons. Not just because Trump and the administration has canceled SEC cases to the extent of 7, 8, 9 against the largest centralized exchanges and players in the space, pardoned players like Arthur Hayes, others. Also actually moved to then make the Federal Reserve rescind their broker-dealer ruling as of yesterday. But due to the absolute rambunctious nature of Trump's campaign, has now created less trust in institutions and governments than ever, I believe, as well as political and global instability, leading to potentially the further inflation of fiat currencies, but also this flight to realization of, wow, perhaps having our store of wealth in what is seen as a system where players of power can just put a few headlines out there, go do a few speeches, and the entire global economy is shaking. This is why gold's going up. Then this has been drawing the Bitcoin use case stronger than I've ever really seen from a kind of more mass market appeal. So this little intersection in history has not only been favorable from the regulatory perspective, but all of the lack of approval of what Trump and the administration is doing now is actually leading to more interest in Bitcoin, and thus will trickle down into crypto. And so that has just been an extremely interesting social experiment per se at the largest scale to watch over the last 2-ish months. And I think the market looks, whether it's going to go up, down, or sideways, the reality is I think the world's waking up to the promise of Bitcoin specifically, not yet the other cryptocurrencies or blockchain as a whole, but I think this little path dependency is we're going to look back and be like, oh wow, like that, this like tariff era led to the mass adoption of Bitcoin, as it's already been kind of, all the dominoes have been kind of pushed. And that was like, it seems like it's being like the final bigger domino in the picture for Bitcoin adoption, at least up till now. Yeah, it's been a very, very interesting last couple of months.
Yeah, I agree. And there's a lot to unpack there. So I think, putting aside my feelings towards Trump, like as a Canadian who's lived in the US and has a lot of American friends, I think that most of us want to see the US succeed, right? And we want to see the US remain powerful and innovative and open and free as a country. And we want the US to engage in the world. One of the ways that it can do that is by continuing to be a leader in finance and technology. Crypto is a technology that is, in my view, sort of representing a new era of the web, and so should be treated as such. And it was a Democrat in the 90s, Bill Clinton and Al Gore, who helped to draft and overhaul the Telecommunications Act and introduce legislation to allow the commercial web to thrive in the US. And so I view this as a similar moment in time where government has an opportunity to create the conditions and to set the ground rules for this new internet of value to grow in America. And I also think that just as the government in the 90s had a .gov website and tried to be a model user of technology to show that they were not only embracing it politically, but also using it, I think the same thing can be true here. So generally speaking, I think it's good that there is this shift within government towards a more open stance, and not a laissez-faire stance, but like, let's come up with some rules of the road and some basic guidelines for this industry to succeed. And I'm happy to hold those two thoughts in my head at the same time.
Yeah, I mean, it's been just
my
like pure
towards Trump as a Canadian, but
yeah, of
what I
course.
will say is that I do worry that Trump sees this, like he sees many other things, as an opportunity for personal enrichment and to consolidate power. And so I worry that, like, a lot of the stuff his sons are doing, and the meme coin and everything, is actually undermining his case as a reformer. And I think, if you look at Paul Atkins in the SEC, or Scott Bessent, like, these are serious people, thoughtful people, who can actually make a difference, right, in how this technology is treated. But I think that World Liberty Financial and Melania Coin make their job harder, don't they?
Yeah, I totally agree.
It makes them have to answer kind of questions about that stuff. So to me, like, it would be better if all of the self-dealing and personal enrichment side of this were just to go away, and we were to get sort of lasting reform. In terms of the bigger picture, so that's like my take on that. In terms of the bigger picture, which is, is this creating a moment for crypto? I think that you're right. And interestingly, it was during the campaign, I can't remember who it was, Mark Cuban. Mark Cuban basically had this theory. He's a Democrat, and so he's like, "Why are all my VC buddies and founder buddies all supporting Donald Trump?" And his theory was, his view was, well, tariffs and instability and chaos and all this stuff was going to cause the dollar to become a lot weaker, and amidst that chaos, maybe cause Bitcoin to increase in value. And at the time, I wrote that seemed a little far-fetched, that most of those people had investments in American companies and other projects in the crypto space, and business can't succeed in a world that is failing, even if Bitcoin can. And I'm not suggesting that the world is failing by any stretch. I think there's a lot of overkill in terms of, like, the commentary, but I do think that you're right. Like, this kind of crazy moment where it's like the whims of a government, the words of a leader, these decisions can have a huge impact on capital flow in the world. And if you look at US markets, for example, like US stock markets, they've had a decent week as we're recording this, but they're still down, 10 to 15% from the top. European markets are actually up. And if you look at the US dollar, it's down against every single peer except for the Chinese currency because the Chinese and maybe trying to devalue it in order to remain competitive, keep their exports competitive if they have to, be subject to higher tariffs. So, but like if you look at the yen, you look at the euro and the pound and this franc, these sort of like store of value type currencies, they're all up big against the US dollars. And European mutual funds have taken in more flows this year than they have in recent record, as we've seen outflows from the US. So there's this, we've lived in an era, Andy, like your whole life, basically.
It's been a bull
era
market
of American exceptionalism and outperformance
for sure
when it comes to financial assets, right? Like
yeah
US market has outperformed the rest of the world since the global financial crisis. The global financial crisis was a long time ago. I
yeah
forget, like
I don't
I'm older
even
than you are.
remember
It's
it.
like 16, 17 years ago. Like, since you were a kid. So it's hard to imagine almost a world where that doesn't happen. But and maybe this is a head fake and we return to form. Like, people generally they overemphasize the recency of events, right? But we could be in store for a real turning, right? Like lots of people talk about this as a turning point or as a shift or what have you, and it's possible that this could be one of those shifts. So what benefits in that shift? Well, the shares of companies in other countries that are not exposed to this, maybe, but more importantly, is to your point, gold and Bitcoin. Gold is at an all-time high, why is it at an all-time high? Because everybody's buying it. Like individuals are buying it, asset managers are now getting exposure, and then governments and central banks. And if you look at, there was an interesting article in Bloomberg that the big buyers of the big gold bugs this cycle are a lot of Asian buyers. And yeah, like, if you live in Asia where you can have currency debasement, where not the government's not necessarily, democratic, depending on which part of Asia that you're in, where you're, China adjacent and there's lots of geopolitical uncertainty, I can see why that would be an appealing thing. And the same thing is true for Bitcoin. I was, my firm, 9 Point Partners, was one of the first to launch a closed-end Bitcoin fund and one of the first to launch a Bitcoin ETF, because in Canada, they were allowed years before they were in the US. And, in that initial raise, I think we raised around 185 million US in that first fundraising event. And this was and remains the thesis that resonated most closely with people. It's like Bitcoin is similar to gold. It's hard to make, right? In the sense of like, to mine gold, you have to pull it out of the ground and refine it. And in order to create new Bitcoin, you've got to do proof of work mining, which is very energy intensive. It's not controlled by a government or corporation. Its ownership is decentralized. It's global. And it's becoming scarcer with time, right? It's harder to find big gold reserves, and Bitcoin block rewards are getting cut in half, right? So it has similarities, but where those similarities end is where I think the story actually gets really interesting, because Bitcoin is infinitely divisible, not infinitely, but it's divisible down to fractions of a penny, whereas it's actually you can't transact in physical gold in small dollar value increments. Bitcoin is easier to move, obviously. It's easier to store. It's harder to forge. It's impossible to forge, right? And it is itself a technology platform. Gold, we know that gold is useful for lots of different things. But industrial uses for gold represent, like, I think less than 10% of demand. So gold is a store of value asset. And clearly that's something that can cause something to be worth a lot of money. But with Bitcoin's a store of value asset, but it's other things too, right? It's like magical internet money. It has other properties that I think give it more upside, honestly. And we're actually experiencing right now like this sort of this renaissance of layer two activity and app development happening on the Bitcoin network, which is really exciting for me because that was what got me interested in it. One of the things that got me interested in it to begin with. So yes, like we're in this moment. I talk about this, it's basically we're at this inflection point where sort of three things are all happening at once. You've got regulatory Headwinds are now tailwinds. The technology is now ready for prime time. And business attitudes have changed from being ambivalent to hostile to now looking at embracing this technology. And then you set that against the backdrop of an unstable and volatile world. And I think you do have the recipe for an extraordinary run in the price of Bitcoin, but also in the adoption of the underlying technology.
And not to mention, you have one of the greatest degens ever known to man, Michael Saylor, levering up against MicroStrategy and buying Bitcoin.
Yeah.
Then just this week, what we have is Brandon Lutnick, the son of the U.S. Commerce Secretary Howard Lutnick, and his firm, his like financial firm Cantor, partnering with SoftBank, Tether, and Bitfinex to essentially create a billion-dollar, multi-billion-dollar SPAC, special purpose accumulation vehicle, or some sort of like
acquisition corp. Yeah.
Acquisition corp.
But I think it is more, I think accumulation vehicle is
I mean, there's no company being built here. It's just Tether getting into the US with this offshore entity and hoarding Bitcoin. And they've raised 200 mil. There's going to be $3 billion of Bitcoin in it. It essentially plays the MicroStrategy playbook, but also already has plenty of collateral to issue debt, use those proceeds to buy more Bitcoin. And effectively, the administration gave its playbook away prior to Trump getting elected. It said, look, we're going to make US the home of Bitcoin and crypto. Obviously, we didn't expect, a meme coin to launch on Solana and run to 80 billion, but here we are. And so now I assume Lutnick's son and, these quote unquote insiders had this information. I mean, it was public. Use that time period to act on it to build now what is being called 21 Capital. Tether is going to put up $1.5 billion of Bitcoin. And basically they're going to go and they are going to run the MicroStrategy playbook at large and compete effectively with MicroStrategy, or at least not allow for a pure monopolization of this idea of hoarding Bitcoin.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional grade liquid staking with METH. Unlock $1 trillion of capital via FBitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Like even when they lose, they win. I mean, ultimately, like how do they compete with MicroStrategy? The only way that they compete is by putting pressure on MicroStrategy's premium, or by taking capital away, right? So when MicroStrategy needs to go to market to raise money, maybe someone's investing in 21 instead. But the bigger picture is that it's going to create more buying pressure for Bitcoin, which is,
to me, they're like bailing out MicroStrategy. Like, all right, well, if you guys are doing it,
like it's
like we're going to do it too. And
if you're a Bitcoin vehicle, buy another entity spending billions of dollars buying Bitcoin is probably a good thing.
Yeah, Saylor's like, well, all right, so my liquidation price is safe. Now 21 Capital has a new liquidation price. Someone's going to have to come in and put their liquidation price higher. But the question here for you, I think, is that it's more around the ethos, right? So I think Saylor owns around and MicroStrategy in their convertible bonds, in their debt offerings. Through those, they've accumulated almost 3% of the supply. I think like 2.7% of the total supply of Bitcoin, 2.5%. 21 Capital is going to come in and assumedly get 0.5%. Where do we draw the line with regards to institutions of ownership of these networks? And like, was this on your bingo card when you were thinking about how Bitcoin adoption was going to happen? I kind of think of it as like this like global snowball of, frankly, like just degen behavior across the board, the over gamification and gambling of kind of all industries. But the concerning aspect is like, when is Saylor owning too much of the Bitcoin supply too much?
Well, it's predicting the future is always difficult to do, And, I used to say the future is not something to be predicted. It's something to be achieved, right? It's up to whoever's and wants to take it on to try and build it. So like Saylor would be a person that did that, kind of grabbed the bull by the horns, so to speak. The future is always a lot weirder than you think it will be. I think this is the thing that I've learned. I think that, we make a lot of predictions about how technologies will be used and what the adoption curve will look like. And, like I think about AI, AI is going to replace call center workers because it can, perform the same tasks as like a mid-level office worker. Well, maybe, but AI is going to lead to a lot weirder outcomes than that. Like that's not going to be the innovation. The innovation is going to be something altogether different, right? Like the explosion of JD Vance memes that completely took over the internet and probably burned through like billions of barrels of oil on computing power, to like, basically I think cloud the record of what this guy will ever actually look like. We'll never really know if he was, maybe he was fat or maybe he was handsome. We'll never know. But but like there's just so many weirder outcomes. So, in 2017, would I have predicted that the president would be launching a meme coin, using his likeness, and that they'd be talking about a strategic Bitcoin reserve, or that there'd be this degen Michael Saylor buying hundreds of billions of dollars or whatever, billions of dollars of Bitcoin, maybe soon hundreds of billions of dollars of Bitcoin? Absolutely not. So you can never predict. In terms of how much is too much, I don't know what the answer is to that question. I think that so long as the Bitcoin mining, sort of hashing power is distributed geographically and across different entities, then it remains, decentralized. Ownership of Bitcoin itself is very important, but I've always sort of felt that, whoever mints the blocks has the power. So that's something that I think is probably more important. And there are mining pools that have way higher concentration of hashing power than Saylor has concentration of Bitcoin. So I don't know that that's like an issue that is top of mind at this point.
Yeah, I mean, I think people like to make claims around it. I think the bigger issue is around like ETFs are these paradox where it's like so good for adoption, but more and more of the ownership is just going to be in these institutional vaults, effectively on behalf of their clients. It's just a very interesting future where back in like when you wrote that book, Blockchain Revolution, I remember on crypto Twitter back in those days, the meme was institutions are coming, and we never got them. I mean, they were 5 years away, but like we were like, all right, we're gonna get the institutions in, and we're gonna dump on them. It's gonna be like the best thing ever. We're gonna liberate ourselves, right? And so now we kind of fast forward, and now we actually have the institutional adoption. So, it's happened on Bitcoin, happened a little bit on ETH, and now we've seen a whole slew of different ETF filings: SWI, XRP, Pengu. Insert your altcoin here. What's your take on the ETF status of non-BTC and ETH crypto assets? Are we going to get ETFs, or are we just, is that kind of a far-fetched idea for something like, a Cardano or a SWI or a Pengu or these types of assets?
Well, I think we will get ETFs in all of those assets. Whether or not they gather any capital is a different kind of question. I mean, so in Canada, we already have Solana ETFs. They actually were announced 2 weeks ago, and 3 different companies have launched them, and I think they're doing pretty well. In Canada, we already have rules around staking. So, even today, like Ether ETFs in the US do not stake their ETH, but in Canada, Ether ETFs do stake their ETH. And Solana ETFs stake their SOL as well, up to 50%. And the reason they can't go to 100% is because of redemptions. If someone, has to withdraw a huge amount of money and you have an asset that's locked up, then it's very difficult to sell, right? So that's something that already exists in Canada, and it will exist in the US. And the argument that you need a regulated futures market in order to maintain transparent, well functioning markets in these underlying assets, I don't think is necessary, because we have lots of ETFs with lots of different kinds of assets in them. We have ETFs with municipal bonds in them. There's no futures market in municipal bonds that I'm aware There's ETFs for for single stocks, like individual equities. So if you can have an ETF with a single equity, why can't you have an ETF with a single asset coin, right? So I don't see why in the next few years, I don't know if it'll happen quickly, but in the next few years, you won't see lots of different filings, things that have been filed turned into actual products. Will they gather assets? It's an interesting question. Bitcoin has amazing mimetic power, right? Like it's the digital for if you're an ETF salesman talking to a stockbroker, an advisor, or you're pitching online to do-it-yourself investors. This is Bitcoin is digital gold. It's a store of value asset. It's a portfolio investment. It's blah blah blah. It's easy to sell. I think some people don't buy what you're selling, but it's still easy to sell. Ether and these other things is a lot more nuance, right? So what am I buying when I buy Ether? Well, you're sort of owning the token that is part of this platform where people are building. Okay, well, who's building? Well, lots of application developers. Well, are they building elsewhere? Yeah, they're actually building on other platforms. Well, why will Ether succeed? Well, because and then blah, and then it's like, and then you're into this whole like sales pitch where you're basically like selling. It's more like comparing the Android operating system to the Apple operating system. Or you're comparing, like one chip maker to the next chip maker. You're getting into a certain level of granularity and detail that requires a deep understanding in order to invest. So I think that and I think that there's lots of crypto assets that are like that, and then there are lots of ones that like don't have value beyond their mimetic value, and they're basically just speculative assets. And so it's like, I don't know, if you want to speculate on Litecoin or Doge and buy the ETF, well, okay, it's a free country, but I'm not sure like what the underlying rationale might be for that.
Yeah.
And I don't know how much they'll gather in assets as a result.
Yeah. It's going to be interesting to watch. I think the first domino to fall outside of BTC and ETH in the US markets will be a big moment because that'll signify that there's going to be others, right?
Yeah.
It was very clear, like BTC came and then ETH came and it was like, okay, they're going to stop there. But again, that was with the old administration. This new administration seems to have a little bit less rules, let's say. So, Alex, the last one I got for you as we kind of look,
Go ahead.
Yeah, as we kind of look ahead into 2025, 2026, where do we think that the entire crypto silo, as I like to refer to it, where do we think the breakthroughs are into what I would just consider like the real world, right? Like where are we seeing the largest real product market fit that will be expansive into sectors that will affect everyday people in concrete terms, especially if you have any examples or clear kind of theses as to why, and even better if it's outside of just speculative use cases.
Yeah, well, to me, the two big ones, one is sort of rooted in my old world of traditional finance, and the other one is more on the cutting edge. So the old world is tokenization of real world assets. And we already know that there's product market fit from stablecoins. Stablecoins have grown from $0 to $240 billion. They've increased by 25% in the last 3 months. And we are just barely scratching the surface for what stablecoins can achieve. Right now, stable coins are buying like less than 1% of U.S. treasuries, but at $3 trillion of circulating supply, they would own more U.S. debt than China, Japan, and the U.K., the three biggest owners combined. So this is something that is happening, and it's growing very quickly. And so why do people own stable coins? Well, because they want an easy, fast, convenient way to store and move dollars. Well, people also want a way to access other kinds of assets that they can't otherwise access, financial assets, so and so forth. So I think that the next couple of years are going to see the stablecoin market grow like crazy, but the share of stablecoins as a percentage of all RWAs shrink, because right now they're like 99%, right? And I think with time they're going to shrink because the rest of the market is growing. And I think that that's just an innovation that is unstoppable. In the same way that ETFs completely transformed the asset management business, allowed you to buy into different strategies, geographies, asset classes through a common unit known as a fund, like an ETF fund unit. The token is like a new kind of like a wrapper to allow you to move and store and access capital and other kinds of assets. Like that is happening. The second thing would be the intersection of crypto and AI. And, this is something, it had a little hot start at the beginning of the year with Solana and a lot of meme coins, and how much of them had real value is debatable. But there's a basic sort of insight, which is that if AI is going to do more and more knowledge work in the economy, and if it's going to have any kind of autonomy to enter into business agreements or do transactions, it can't do that by incorporating, it can't do that by opening a bank account because it's not a legal person. So the only way it can do that is with crypto, and with the crypto sort of toolkit of smart contracts, DAOs, and so forth. It can create a DAO, it can have a contract paid, fee for service that gets paid in stable coins, and it can accumulate that in a wallet which it controls. That's all possible already, right? We already know this to be the case. So I think that probably the agent narrative is overblown in terms of what agents can do. But like both of these technologies, what I find so fascinating is like AI and crypto are overnight success stories that have been kind of decades in the making, and are both sort of hitting this inflection point at the same time. And yeah, it makes sense that like machine money should be used mostly by machines, and that's basically what crypto is. So I think that that's something that we have to pay very close attention to. And it's incredibly interesting as an investor looking at this space, where to put your money, because if you're a VC and you're like enmeshed in it, and you're talking to founders and you're doing the deep diligence, that's one thing. But if you're sort of looking at the market as a whole, one agent project to the next agent project, it's incredibly difficult to know, right, in my opinion. So in the same way that buying ETH during the DeFi summer was a good way of getting exposure to like sort of the DeFi phenomenon, I think similarly there's going to be platforms that emerge that where AI is well suited, and where you're going to see the growth of those underlying platforms do really, really well. And I think probably they're going to be, layer ones with high throughput that are geared towards those kinds of use cases, whether it's Sol or Sui or Say or, Avalanche. I think that all of those different networks could do well. In the same way too, like during that last cycle, a lot of like EVM compatible alt layer ones actually did very, very well and outperformed ETH during that cycle. So like thinking about how to play it, and this is not financial advice, I'm just sort of like, speaking extemporaneously, looking at it like the more that gets built on the platform, the better the platform does, because more fee revenue generates more yield for stakers, right? It's actually like a mathematical formula. So being able to pick the right platform, I think, is going to be really important.
Yeah, I think that's been the underlying infra thesis for a while, but specifically for AI, I think we may even see new emergence, or as you're saying, the platforms which focus, being able to stay focused on that and invest in it and invest in builders there will likely be the ones who are able to capture that value. Stablecoins, RWAs, also very, very interesting. It seems like this barbell of crypto adoption right now has been driven by payments, stablecoins on one side, RWAs there as well, and then on the other side, more of these speculative DeFi kind of 24/7 transactions, yield farming NFTs, kind of community games per se. And so excited as we see more of that like kind of middle of the barbell get filled out.
Well, the other thing too, which would be nice to actually work this time around, are decentralized applications for things other than transacting in crypto assets, right? And in the book Web3, in my new book, I talk about decentralized social media and how social networks are only valuable because of their users. Their users contribute the data, they make the social connections, they are the ones whose activity gives the platform value. And the way we monetize that value in Web2 is through advertising, by taking that data and reselling it. But why not compensate the people directly for being the platform owners in essence? And every attempt at doing something like this has failed spectacularly.
Yeah, no, I mean, this is also one of the things that like got me most interested as well back in the day.
Like the token, and this big token incentive, and everyone's like yield farming, and then they're like, they suck it all up, and then they move on to the next thing, and it's like nobody ever wants to use the underlying platform. And so like what I've read in the past is like, do tokens inherently corrupt like web applications, or can you find a way where ownership is incidental to usage, meaning like you use something and then you own it, but you own it, and owning is a nice to have, not a need to have. or it's like doesn't become the main priority, right? Because I think right now it's like, oh, there's a new crypto project. Let's figure out how much of the token we can kind of accumulate through our actions, and then move on to the next thing, right? And I think that's been harmful actually for the development of crypto.
Yep. Yep, I agree. Alex, I appreciate your time and your insights here, from the macroeconomics to the ethos to investing in the space and more. And really appreciate your work back in the day. It's what got me into the space. Forever grateful for that, as well as just to be a part of this investing journey, as well as personal growth. And thanks for your time, man.
Yeah, thanks, Andy. That was a great chat.